Danielle D'Souza, pet-friendly lender with Homebridge Financial. Closing costs part 2. So you will receive a closing statement, a loan estimate, or a closing disclosure. So the closing statement usually, or a closing worksheet, is going to be with your pre-approval. That's what you would get with me. I can't say what you'll get with other lenders. And then once you go under contract, you'll receive what's called a loan estimate. And then 3 days before your closing, you'll receive a closing disclosure. They're all basically the same form. They're going to vary in different fees, and the cost is going to change because it's just going to depend on your interest rate, and it's going to depend on what day you actually close. A lot of what a lender is going to give you is an estimate initially, because we don't know what the property taxes are going to be yet. We don't know what your homeowner's insurance is going to be yet. And we don't know what exact title company, especially if we don't have a contract yet, we won't know what their fees are going to be. So a lot of it is an estimate. But on the estimate, you will see things like the purchase price, the down payment, and your loan amount. You're going to see what your interest rate is. And then you're going to see a lot of fees. And I get asked a lot, what are all these fees? And on our loan estimate or a closing worksheet, they're just estimated. And they're not something that you can really take away, or I don't want that service. They're just an estimate, and it will be narrowed down once you go under contract and we get to talk to the title company and see what fees they actually charge. So as a lender is going to charge their fees, and that's going to be, lender fee or administrative fee or application, underwriting. That is going to be, there's different names for it, but the lender will have a fee. And then you will have appraisal fee. So when the property will be appraised, so there will be an appraisal fee. There will be a credit report fee. There's going to be a settlement fee, a title search, and a wire transfer fee. There's owner's title insurance, lender's title insurance, that both of those have to happen, recording fee, transfer taxes, state tax, and then a survey. And those are all with the title, and those are all part of transferring the ownership from the seller to the buyer. And then you will have escrow, where if you're not necessarily, but if you pay less than 20% down, then you will be required to pay an escrow, where they hold your property taxes and your homeowner's insurance in an escrow account, and then the mortgage servicer pays those from that account. And so they will be collecting that amount as well up front. And then you will have, if you paid your interest rate, if you wanted to buy your interest rate down, you might have discount points in there, depending. And then if you had any credits, if you had sellers pay any closing costs, or you've had any lender's credits or builder credits or seller credits, anything like that, then that will come off of that price. When you pay your escrow deposit, that will also come off that price. And at the end of your sheet, it will say estimated cash to close or cash to close. And you're going to go off that number. That's typically the number that you're going to wire to the title company when you get closer to closing. And if that wire amount or that estimated amount is off a little bit, it's okay. The title company can issue you a check if you go over a little bit. But again, feel free to reach out to me if you have any questions. 386-589-9037. Danielle D'Souza, pet-friendly lender with Homebridge Financial. Thanks. Bye-bye.